Good morning all, welcome to the pre-market overview. Today is Friday, October 9th. Happy Friday to you guys. Hope the markets have treated you well this week. There's been a lot of indecision at the start of the week, lots of unconfirmed climates, and today we seem to be a little bit more decisive on what is going on, so we'll show you that on the newsletter today. For those of you that don't already have the subscription to the newsletter, if you email us, newsletter@tradewithufos.com, then we will put you on that subscription list. So we will send you that newsletter every day, Monday to Friday, before the markets open. In that newsletter, we're going to go through 4 of the major markets in the world and show you what the technology is saying as to where the probabilities lie. Now, we do the pre-market overview for 15-20 minutes to just expand on that newsletter, to just expand on that document and the concepts used in it so that you can understand a little bit more how we came to those conclusions, how we use what we use. So there's that. When it comes to other email addresses, you have mine, which is becky@tradewithufos.com, and support@tradewithufos.com. So you can email either one of us if you have questions about anything I cover. If you're joining us from within the Tradewith channel, or if you're new to the Tradewith channel, just to remind you that today being Friday means you have options at 9 a.m. Eastern and then futures at 1 p.m. Eastern. Normally, stocks and investing, they are going to be Tuesdays and Thursdays, and then we have sharpening over the weekend, one of which is a psychology session, and one of which would be a methodology, questions and answer kind of session. So that's everything from within the Tradewith channel. There's then courses. So the courses will be sort of foundational topics, building that knowledge, teaching you how to trade with a particular methodology, the one obviously that we use, how to trade particular asset classes, psychology, trading plans, back testing. So for people that are either inside or outside of the Tradewith channel, if you're interested in those courses, these are the ones that we do. Stocks course come to an end today. Then we have psychology starting tomorrow, 5 p.m. Eastern. After that, we have the futures class, then trading plans and back testing. I'll show you in a minute where you can go to learn a bit more about that. Before I do so, let's just put the disclaimer on the screen. I won't read it to you because it's a lot of text, but it is important that you guys read it, not just for legal purposes or compliance purposes, but it is in general good advice to understand that, of course, there is a risk involved when you trade. Ultimately, it's up to you to decide which trades you place and the risk that you use, the accounts that you use, things like that. We will show you demonstrations of how to use the products, give you some trading ideas and some educational content, but ultimately it is up to you to decide which trades you place. If you want to come back and pause the video and read this disclaimer, you can, or you can go to www.youcantrade.com and you will get additional disclosure information there. So this is how you go to find out more about what we do. So if you go to youcantrade.com and choose the Tradewith channel, you'll see that you can start a free channel trial to try out what we saw there on the left-hand side, the sessions that we saw on the left-hand side that we do every day throughout the week. You can schedule a clarification call if you want to speak to somebody before you sign up for the channel, or you can click Browse Courses. If you click Browse Courses, then it will open up a separate page and it will show you each of those 5 classes that we do. You can understand more about them by clicking on Course Details. That will open up a separate page, and once again through there you can schedule a clarification call if you need to speak to somebody before you register for a course. So you just need to put in your name and email address so that we can send you a link to that call. You're going to choose a date and time that suits you best for the callback, so that again we will be there at that time through that link. And you can put in some questions as well if you want to beforehand, if you want us to be prepared with answers or anything. You can leave that blank. If you click request, or when you click request, a little pop-up will come up to say that it's done, and you will also get an email with that link in. Okay, one more reminder, you can join us mobily through the App Store. So if you search You Can Trade on the App Store, you'll see us there. Nothing on Android at the moment, but for the time being on the App Store, again, you can join us by searching You Can Trade. Okay, right, so that's everything in terms of introduction. So let's crack on and get through the newsletter. So the newsletter is what we see here on the right-hand side. Obviously, we have the charts there on the left-hand side. Now, in the newsletter, we go through 4 of the major markets in the world. So we've got the S&P, that top one. Then we have oil, gold, and the euro. 4 major markets. Lots and lots of orders move through these markets. I'm sure billions every day, if not more. So again, even though you might not trade these markets specifically, the amount of orders moving through them means that they are likely to be correlated to or impact other markets as well. Now, you'll notice that what we do is go through a daily chart per market. Now, again, different things happen on different timeframes. You may not trade these timeframes, but the daily chart is one of the most commonly used timeframes, hence why we use that. Now, for each of these markets, what we're going to look at is a couple of different technologies that are going to help us figure out probabilities. So the first thing we need to understand is climate. Climate means what direction is the market going in and what are the probabilities associated with that. So we use an app called the ᴾᴿᴱMARKET app, which analyzes market data for us and comes back to tell us, again, what the direction of the market is and what the probabilities are. So this is the ᴾᴿᴱMARKET app that we see here on the bottom of the chart here. Ignore the lines for now, just focus on the dots there right at the bottom, the colors of the dots and the thickness. So the ᴾᴿᴱMARKET app will show us one of three things. First thing it could show us a thick blue dot. A thick blue dot tells us that we're in a confirmed upwards climate, probability to the upside. A thick red dot tells us that we're in a confirmed downwards climate, probability to the downside. Then we have thin dots of either color. The color will still tell us the direction, blue is up, red is down, but the fact that it's thin, that is the ᴾᴿᴱMARKET app's way of telling us that we don't have probabilities, no statistical advantage, and that it's better to keep away. So we're going to look at climate per market. Linked to that, we want to understand propagating. So propagating means how long can we expect that climate to continue based on what normally happens. So if we're in an upwards climate, how long does that market usually go up for? If we're in a downwards climate, how long would it usually go down for? So that we can see how long or how much longer we have left into a particular move. So on the right-hand side, we see here, that's what normally happens. How long does that market usually go up or down for, depending on what we're in right now, in terms of number of candles. Now, you'll notice all of these are decimal places. Of course, we can't have points of a candle. It's obviously giving us an average there. So I'm just going to round up all of those numbers. Whatever the decimal place is, I'm going to round it up. So that's what usually happens. On the left-hand side, this is where we're at now. How many candles have we already gone into that move? So again, from those two figures, we can get an idea of how long we have to go in terms of a particular movement based on what usually happens, or whether or not maybe we're coming to the end of what would be a usual movement or have surpassed what would be a usual movement and therefore would be more likely to see price change direction rather than keep going in that direction. So we'll look at that per market as well. And then what we'll also look at is nearest UFOs. So UFO stands for unfilled order. What that means is that we expect there to be buy orders that are in a market waiting to push it up and sell orders in a market that are waiting to push it down. So again, we use technology to highlight on a chart for us where those orders are likely to be, to analyze market data for us and show us that. We're using the ᴾᴿᴱUFO app. And what it will do is where it detects there to be buy orders, it will highlight to us as a green UFO. If there are sell orders, it will look something like this. There's none on this chart for now. If there are sell orders, then it will highlight to us as a red UFO. I'll show you a proper one in a minute, not just my drawing. So we're going to look at each of these concepts per market. Climate, what's the direction of the market and what the probabilities? Propagating, how long can we expect it to keep going up or down for? And where do we have stacks of orders that could change the direction of price? So we'll do that per market. What we'll also do per market is come down and understand volatility. So volatility just means how fast we can expect these markets to move or how far we expect them to go within given periods of time. So the base thing that we use here is the current implied volatility numbers. You'll notice each of these numbers are a percentage. These refer to the expected movement up or down in 1 year on these markets as a percentage of their current value. So what's the movement expected up or down in 1 year as a percentage? Now from that, we can reverse engineer it and understand what we expect in terms of up or down in a day, up or down in a week, and up or down in a month. Again, you'll notice I use the phrase up or down. So these volatility figures give us an idea as to how far we expect it to move in either direction, up or down. So the climate and propagating help us figure out in which direction we're likely to see that move happen. And the propagating as well, along with the nearest UFOs, will help us figure out where price might be likely to change direction and turn around. So we will look at each of these concepts per market, each of the figures per market, and then we'll come down and just talk about the news. So lots to cover. Let's start with the S&P, since that's what we have here on our charts already. So with the S&P, as we see, we have a thick blue dot, confirmed upwards climate, probability to the upside when it comes to the top 500 US stocks with the S&P index. Now, usually the S&P would go up for 10 candles, and we're on candle number 8. meaning that we have a couple of days left in terms of what normally happens to the upside, a couple of days left of continuous movement to the upside when it comes to the propagating figures. So still within probability of a continuous move up. When it comes to orders, we have buy orders beneath us there at 33.48.42 to 33.23.69. And as we saw, no sell orders, nothing up here. Which means that we have room again to the upside because we don't have sell orders there, at least on this time frame, that would be likely to push price down. So overall with the S&P, probabilities on each of these counts to the upside. Now, just because something is probable does not make it definite. So you may well look at other variables that you need to sort of check a box before you place a trade. Definitely we need to manage our risk just in case we're wrong. But again, as far as this technology goes, overall probabilities to the upside there with the S&P. Now, if we come down and look at volatility, with the S&P, we would expect a movement up or down in 1 year of 26.05% of its current value, which means in a day, we would expect movement up or down of 0.57 points, in a week, up or down of 1.25 points, and in a month, up or down of 2.59 points. So that's the S&P. Let's look at the next market. That will be oil. So at CL, that is the continuous futures contract for oil. I'm just going to squish price together a little bit here so we can see it and see the numbers. There we go. So with oil, we have a thick blue dot, a confirmed upwards climate probability to the upside. Usually oil would go up for 7 candles and we're on candle number 4. So probability of a continuous move there to the upside. When it comes to orders, I'm just going to spread this out actually a little bit so we can see the closest one's a bit easier. Here we go. So we have the closest stack of buy orders just beneath us here, 39.95 to 39.28. And we have sell orders slightly further away there at 42.86 to 44.03. So again, with oil at the moment, overall probabilities to the upside, confirmed upwards climate, probabilities that it continues at least for another few days, and buy orders beneath us that are likely to push price up. Again, just because it's probable doesn't make it definite, so do be careful, do manage your risk, but overall there are probabilities there to the upside. Now, when it comes to volatility, we expect a movement up or down in 1 year of 41.15%. That means in 1 day, up or down of 1.06 points, in a week, up or down of 2.33 points, and in a month, up or down of 4.85 points. So that is oil. Let's look at gold. That's the next market at GC. That is the continuous futures contract once again there for gold. We've got an interesting one here on gold because we have different forces kind of fighting against each other here. So we have a thick red dot, which is a confirmed downwards climate, probability to the downside. We also have probability of a continuous move down because normally gold would go down for 5 candles and we're on candle number 2. So again, probability that it continues to the downside. However, we have buy orders here just beneath us that are already working to be pushing price up. So the numbers for that are 1876.9 to 1851.0. And we see here price came into this a couple of days ago, reacted a little bit, but obviously today it's kind of gone up a little bit more. So we're seeing buy orders there push price upwards. So we've got climate pushing it down, but we have buy orders pushing it up. So 2 forces there working against each other. I prefer not to get involved in that fight. I would rather see who wins and join that team. So for the time being, I would be keeping away. Bear in mind, you have overall probabilities there to the downside with gold. But like I said, not everything is lining up the way we want it to because we do have buy orders in the way of that move down. In fact, already pushing price up. Now, when it comes to volatility for gold, we'd expect movement up or down in 1 year of 21.96%, which means in a day, movement up or down of 26.6 points, in a week, up or down of 58.5 points, and in a month, up or down of 121.9 points. So that is gold. Let's look at the euro US dollar. That is the spot forex currency pair here. I'm just going to squidge price down so we can see what we need to see. There we go. So for the euro US dollar, we have a thick blue dot, confirmed upwards climate, probability to the upside. We have probability of a continuous move because the euro usually goes up for 5 days and we're on day number 2. So again, probability that it continues to the upside at least for another few days. In terms of orders, we have loads of buy orders beneath us. As we can see, there is about eight or nine on top of each other. The top one is 1.1597 to 1.1507, and the closest stack of sell orders is quite a way away there at 1.2344 to 1.2414. I've just rounded those numbers to the closest pip where they need to be. So overall with the euro, probabilities to the upside, confirmed upwards climate, probability that it continues to the upside, buy orders underneath us and sell orders quite far away. So again, things lining up there to be probable to the upside. Again, doesn't make it definite. Of course, things fall outside of probabilities and statistics, but as traders, we definitely don't want to trade at all unless we have at least some form of probabilities on our side. So that's why we use this technology to analyze market data for us and show us where the probabilities lie to make it easier for us to make decisions. That's not to say that you might not have other things that you look at as well to lay it into this. But again, as far as probabilities go with the euro, probability to the upside there. Now, when it comes to volatility, we expect movement up or down in 1 year of 7.66%, which means 57 pips up or down in a day, 125 pips up or down in a week, and 261 pips up or down in a month. So this is our volatility, or this is the volatility figures for the euro. Again, volatility in general just means how far we expect these prices to move within given periods of time, up or down. The climate and the propagating give us an idea of in which direction are we likely to see that move happen, up or down. And the nearest UFOs will give us an idea as to where price is likely to turn. We've seen on a couple of charts already here, orders doing what they should be doing. We had buy orders here, price came in and it's pushed it up. That's what we expect buy orders to do. We expect sell orders, if price comes into sell orders, to push it back down again. That's what we expect these orders to do. So the UFOs show us where price might be likely to turn. Again, it's using technology to analyze market data for us, show us where the probabilities lie to make it easier for us to make a decision. And then you layer in your risk management and other strategies on top if you want to. Okay, so that's everything in terms of the chart and the tech. Let's go to the newsletter itself now and just come down straight down to news. Now, nothing actually to say for today. We go to fxstreet.com and look at the economic calendar, filter by high impact news and by US markets. Of course, you can go to that link and change the filters if you want to see different things. But for us, looking at high impact news on US markets, there is nothing today and there was nothing yesterday. The news came more at the start of the week. This is scheduled reporting. Of course, unexpected things happen in the news that can change things, especially at the moment with COVID, elections, all these kind of things going on. We would expect more volatility around these kind of times. But in terms of scheduled reporting that are likely to have an impact, nothing for today. Okay, so that is everything in terms of the content for the newsletter. Just a reminder then for those that might join us on YouTube and are maybe interested in the channel, you can join us at tradewithufos.com/you-can-trade. That's where you can access those sessions every day. Futures, stocks, options, investing, psychology, sharpening sessions. Those are the sessions that we do throughout the week. That's what you get as part of the subscription. You can try us out for a couple of weeks first, see if you like it, and then go from there. If you don't like it, you just cancel the subscription. If you do like it, then at least you've had a good couple of weeks to really know that it suits you. And then when it comes to courses, the next one that we're doing is the psychology class. So if you go to tradictive.com/psychology live, you can learn more about those classes and what we do in that class. It starts tomorrow at 5 p.m. Eastern. To me, psychology is one of the most important and most overlooked features or concepts in trading. It's something that most people, we just want to learn how to do a methodology, teach me how to do it, teach me what buttons to press and I'll go do it. But you can have the best methodology in the world unless you are figuring out what's going on between your ears. You're unlikely to be able to be disciplined enough to enact it the way you need to deal with losers, which are going to happen in the way that you need to be objective. So psychology is really, really important. So if you want to learn more about how we do it, just go to that link. Now, you can register for any course and get an additional course for free. So go to the website, see what we do, see what courses we do, see which ones work for you and how you can put it together in such a way where you can make the most of that deal. If you have questions about anything, courses, subscriptions, technology, anything I've covered today, you can email us support@tradective.com. Otherwise, if you're joining us from within the channel, we will see you in the sessions today, options and then futures. Otherwise, I'll be back on Monday. So I hope you guys have a good weekend. Hope the end of the week treats you well in the markets, and I'll see you Monday morning. Have a good weekend, guys. Take care. Bye-bye.